guys. Um, Today I'll be reviewing AUDUSD, and the reason why I'll be reviewing AUDUSD again today is because I actually analyzed it yesterday, and I told us that I was expecting some things to play out, and I gave us time and what to anticipate at the time, right? And I'm going to be revealing it to us today, right? I'm going to be showing us and stuff like that. Now, if you're just watching, if this is the first video you are watching and you don't understand these lines, these shaded areas on my charts, I'll advise you go back to my previous videos and watch them. Okay, in these teachings, in my analysis, we don't use trend lines, we don't use support and resistance, we don't use indicators, we don't use theories or whatever. We just follow simple price action. In fact, if you follow what I'm teaching you, what I'm exposing to you here, you might begin to see that you would stop using those trend line and those things on your charts, and mere looking at the chart, you already know what price wants to do. For example, I stopped using all these tools a very long time ago. Imagine plotting over 50 tools, lots of things on your chart, and then your chart starts looking like a busy place and you don't even know what you want to do. You start getting confused. No. When you are analyzing, you want to analyze and know what you're doing without distraction. See those lines, those trend lines, they are just for illustration purpose. That's the reason why they exist. They don't exist to act as analysis determinants. No. They exist as, for illustration purposes. For example, if I was to trade, right? Well, I'm the one to be trading, I wouldn't need to plot anything. I already know that this was going to be a fall. I already know that from here, this was going to be a fall. I already know from here to here, it was going to be rise. It's going to, market is going to give a pullback. Without plotting, no resistance, no support, no trend line, nothing. Just looking at price and understanding what price is doing, and then using that knowledge, that understanding, to build a premise. We are understanding what I'm trying to say here. I'm trying to paint a picture of a very neat chart, right? Your charts have to be very neat, very clean, so that when you look at your chart, you know what you're doing, what you've been doing, what you're doing. So let's just get down to business. Remember, the first thing we want to plot is our previous day low. I'm going to this was the previous day low, right here. A previous day high. This was the previous day high here. And then this present day open price. I'm going to put that now. And that's all. Remember the rules, right? You all still remember the rules. If we're buying below the open price. If we're selling above the opening price of the day. Now, mind you, for the past analysis I've been giving, I've only been talking about, plotting the previous day high and the previous day low, but I've not talked about it. All I've been talking about is the daily open, and I have my reasons for doing that. If you can't understand the way markets interact in a day, you can't understand how the market interacts with other days. It's as simple as that. For example, the opening price for AUDUSD, right, was this spot here, right? This was the opening price around here. And then we can see price oscillate in Asia session and do whatever it wants to do. Now, yesterday I told us, right? I showed us the trade I took. I was able to sell from this very top. And I told us that if price, the reason why I was selling here, I explained it to you is in our last video. I want you to go back through the video to get a detailed explanation because I won't be talking much about it. So I was able to sell here. And then I told us two things. I told us something. I said, the first thing is, I anticipate price to fall into London, right? And that was what happened. Because considering the fact that the day was closed yesterday, which was Wednesday, right? And a new trading day has opened on Thursday, it makes sense to just close my position for the day and wait for the next day. But that was just, I explained what a mirage is for us yesterday, because I knew price was going down. I told us, I said, price would, fall all the way down to London and then reverse. And if it does not reverse in London, then it's going to fall all the way in New York before reversing. And this, what I told us, played out perfectly. And I gave you the proof of me trading this on my Instagram. For those of you who are not on my Instagram, try to connect with me on Instagram, right? So I'm not trying to show off. I'm just trying to tell you that when you see price, when you see this market from the perspective of price, you begin to see things better. There are a lot of things that have to deal with this. Lots of things, right? Unfortunately, I won't be talking about everything because I have an academy where I teach my students, and what I'm teaching you, what I'm talking about right now, is not public knowledge. Go over all the channel anywhere you want to go to. What I'm teaching you here is not being taught. This is things I coined from my research. These are things I built through years of diligent research. Okay, so I'm taking full credit for whatever I'm teaching you here. I wasn't taught by no mentors. I didn't read it on the website. I didn't see it somewhere. This is just simplified expression of the understanding of price action. And when I start this series, it's going to be a blockbuster, honestly, because I'm going to be revealing lots and lots and lots of things to you guys. Now, let's proceed. When, let's say, the daily open was here, right? And then remember I told us our direction was, so we're looking for sell entries, right? But now let's imagine we did not have any directional premise, right? Let's just imagine we just come into this market and we just want to focus on today. How would we have traded this day? Now, I know retailers will tell you that this here, this portion here, right? This whole portion here, they call it relative support. All right, this is a relative support, right? I mean, but then I don't see these two spots here as relative support. I see them as money points. Here, money is here. Every single highs and lows, there are money there. Thousands and billions of dollars. Just know that. It is not support. It is not support. It is not even resistance. This level here is not, I'm sorry, I was saying support, right? My apologies for that. I meant to say resistance. Okay, not support. My apologies for that. I hope the correction is taken. So they will tell you this is support. And the reason why price, and they will tell you the reason why price moved up here is because this is support. No, it's wrong. It's very wrong. You don't say the reason why price moved away from a region is because that region is what people perceive it to be. No. The reason why price is moving away from this region is because of price. The reason why market is moving away from this region is because of price. Pricing to reprice. Now, let me reveal something to you in this little price action, right? Now, from the opening of the day to New York session, price was literally consolidating. There was no specific direction of price. Right? Price was just, moving from one point to the other. As we can see. It was just oscillating from this high to this low and moving. Then there was a move, this huge move in New York. Now, pay attention. From here, right, from the daily open to New York, right, there was constant price oscillation. In other words, highs were being taken out. For example, you see this high here? I think this was not taken out, right? But you see this high, this low, this high, this low, this highs, this low, this highs, everything were being taken out, right? And then from London, there was protection of lows. In other words, price was creating higher movements, but in the form of liquidity. Now, I have two type of concept for, when price moves up to, let people who think this is, people who think, okay, this is support, right? And then they are buying here, they are buying. And, price keeps on going their way and they feel, oh, they are really trading. The name, what I call this, right, is the rise concept. And it's a concept I developed on my own. And unfortunately, I might not be talking about it because it's very extensive. But what I want you to know is from this low, right, to this high, this is the mirage. I talked about mirage yesterday. This is the mirage. And there are lots of people in this mirage who feel like, okay, they are buying at a support and, probably hoping to take profit and wherever, and then the market did them dirty. This here is this, you see, this low to this high is what I called the point or the price movement or the market movement for folks who don't know what exactly is happening. The real market movement, the real trend for the day, right, was to be a fall. Because from this low to this high, it's already depicted that. I mean, when let's analyze that. Let me try to analyze that. If we draw from this high, right, through here. This is 1. So we can see that this high have been taking. All these highs were being swept. I explained to us that all these highs are liquidity points, but they have been swept. Okay, the only highs that were free is this one and all those ones. But considering yesterday's move, right, I do not anticipate a continuation, right? And I explained that to us yesterday also when I was talking about DPM, daily price movement, daily peak movement rather. Now, when there is nowhere to go above, when there is no money above, where is the next point to go? Below. And now let me show you the amazing part here is that I'm going to the amazing part here is that the reversal point was where? Was it below or above the daily open? Above. Now this is to tell you that there is a price is expensive enough to fall. I don't want to use the word overbought because I don't really think there's something like overbought or oversold. Yeah, there's nothing like overbought or oversold. Those are just terminologies that are being coined up by people to make you feel there is a point where something can be overbought and then it's no. The things, a particular item can keep on buying and buying and buying and keep on growing. And for it to fall does not mean it has been overbought. No, it just means that the price has gotten to a level where it becomes expensive enough to be sold. Right? Don't worry, I'll be explaining this in the series coming very well. But just pay attention to what I'm showing you. So we do not have much stories, right? In London, if you add, let's say for example, you trade Asia, right? For our Asia traders, let's imagine this is the daily open and you're looking for a sell, right? Price is above, created a low and gave you this beautiful imbalance there. Now, if you draw that imbalance out in time, right? Draw it out. You could have entered a sell here and taken profit at this low here, because that's the liquidity point. But if, let's imagine you're looking for a buy, right? I don't think there's any, I think whatever reason that's making you to buy here is a very wrong reason, because there is no valid structure, valid order block to give a buy entry here. You see this low to this high to this low. The same thing happened here. This low to this high, and then an imbalance was created in between. Price coming to the imbalance and dropping. Now, if we go to the lower time frame, I'm going to draw this thing here out in time for us to see. Now, if we go to the lower TF, you see this dark portion, this portion that I, shaded out. It was an here at this spot, right? This, let me show you that. This blue, this up close candle and this down close candle, this takeout above all this high is the liquidity sweep, a valid order block that swept all the liquidity above, right, and created an imbalance in between. Now when price came into this imbalance, we could anticipate a fall, but unfortunately it didn't fall. In other words, there is more, price still have something to take above, and then did that in New York. So the fall we didn't get in London, we got it in New York. Time. the time concept. And I think I was able to close my trade at very nice profit today. I'm going to bring that out now for us to see. Okay, so as we can see, I sold here yesterday and I was able to take profit here today. You can see that. You see, my take profit was at the low. Now, how did I know that price would reverse at this specific point? I mean, you don't tell me that support and resistance did this. If you look to the left, there is no support level here. So your question should be, chart with Max, how do you know that, okay, this is the reversal point? This will be the reversal point. Why didn't you take profit here or here or here? Why did you take profit here? And these are the things that I'm going to be teaching you in my series. And for those of you who want to get your hand on the full teaching, you're free to register with the Kryptonian Academy. That's my academy, and all these things will be revealed to you, concept by concept, block by block, knowledge by knowledge. But the point I want you to see is me selling at the very top and not taking profit all the way to the very to the last pip is not magic. It's simple time, price, and understanding the market. Understanding that. Now, if you look at today, this is an inside trading day. In other words, an inside trade day is a day whereby the price or market did not break the previous day low or the previous day high. So in other words, price traded inside the previous day. So there is accumulation of liquidity on the high and low of this day and on the high and low of this day. Now, with this knowledge, we know that the next day will definitely be an outside close day. Now, what is an inside day close day and outside day close? That's another question that will be answered when we start our series. But like I said, everything I've been teaching so far are just for review purpose, to help you understand that this market does not move because your indicator says so. It doesn't move because your supports or resistance or Wyckoff theory or whatever theory says so. Yes, those things works. They work. But because something works does not mean it is the reason why something works. For example, let's say, I don't know the analogy to use, but if you have a car, right, and there are people who are pushing, let's say the car gets stuck or something happened, right, and you have to call some people to help you push the car. Now, when they push this car, the car moves, right? Yeah, the car moves. That's the point. The point is the car is moving because you want it to move anyway. But the reason why it is moving is not the main factor for its movement. It is moving because people are pushing it, but that is not like, I hope you understand what I'm trying to say. Until you put your car in gear and then the acceleration starts moving the car by itself, now you are moving. But as long as people are pushing the car, everything is not, that's not the conditions that, is being programmed for the car to move. So because support and resistance works once in a while, because your Wyckoff works once in a while, because your whatever theory indicators works once in a while, doesn't mean it is the right thing. It is the right thing rather. No. The right thing is what I'm showing you here. Is what I'm exposing to you. And if you go to your chart, you practice these simple things that I've been showing you trust me, you're going to begin to see this market from different perspective. I don't know where you learned from, whom you learned from, but if you're not trading this way, then you have not started being a trader. Because what I'm showing you is how the market is being traded. Simple pricing, buying high and selling low. But you don't just go to the market and buy high and sell low. You want to know why you should be buying high, where you should be buying high. Start to think the why and the where and when you should be buying. Selling high. My apologies for that, rather. Okay, I think there are a lot of blunders in this video, but I've corrected my blunders. Okay, so it is not buying high, it is selling high and buying low. So you want to know when you should be buying low, why you want to buy low, and when exactly. For example, the reason for me selling at this high is because of DPM. I already explained that to you, right? And when should I be selling? I knew I was not supposed to be selling in New York, in London, or in between. I knew that the when was in New York. As simple as that. So that brings us to the end of tonight. Yeah, that also reminds me, tomorrow is Friday, the 6th of January 2023. There's going to be NFP news release. I'm going to be going live. I'll be going live on my Instagram. You can just go to Instagram and search for my name, Charts with Max. The chart has an it have a S, so CHARTSWITHMAX. That's Charts with Max. I'll be going live and I'll be giving signals, and we'll be trying to make sure we'll make some profit in this market. Okay guys,